Hello, Valley of the Sun. Thank you for joining me, your host, Nathan Claiborne of the Phoenix Real Estate Roundup. Today is February 15th, 2023, and it is our 100th episode of the Phoenix Real Estate Roundup. I want to thank all of you for joining me, for listening to my stats and market info every week. I hope you found some value in it. I hope it helped you make a smarter decision than you would have otherwise. That's why I'm here every week breaking it down for you. Today, the active listings on the multiple listing service here, 15,328. That's 170 fewer listings than last week. Another 1% drop. Every week we go down 1% or so. So we continue to see inventory going down. That continues to be the story. However, interest rates have definitely popped up this week. Get this, they're at 6.75%, which is outside of that range that I keep talking about. I keep saying they're going to bounce between 6 and 6.5, and here they are proving me wrong at 6 3/4, unfortunately. But I'll get to a couple of reasons why that is. We got some big reports that came out this past week. I'll start with the first one, the Consumer Price Index. That's what everyone is talking about. Certainly made a lot of splash. The Consumer Price Index shows that in January, year over year, inflation went up 6.4%. Obviously, that's more than we're looking for. The Fed is hoping to get that down to 2.5% or 2%. But a couple of interesting things that popped out to me as I was reading the report from the Bureau of Labor Statistics. I'm just going to read this paragraph for you. The index for shelter was by far the largest contributor to the monthly increase, accounting for nearly half of all items increase with indexes for food, gasoline, and natural gas also contributing. Okay, what that's saying is the cost of housing is leading the way in terms of the increase in consumer pricing. The cost of housing, shelter, is leading the way for inflation, essentially. So that tells me that the demand for shelter is strong and the supply is not as strong. The supply is lacking, and that is pushing prices up. This is not a recipe for a crash, right? Usually a crash means that there are too much supply and not enough demand. That's what we see. So not the case still. There's still the other way around. There's too much demand and not enough supply in terms of shelter. And this is all across shelter. This is purchasing, renting, short-term renting, all that stuff. But that's something to keep in mind, that the cost of shelter is leading the way in terms of pricing increases for the consumer. That's a lot. So now it does show that inflation is still slowing down, albeit at a little bit slower rate than we hope, but it's still slowing down for the 7th or 8th month in a row. Inflation has reduced. Now, the next report that came out is the one that was a little bit more of a blockbuster. So we saw the Consumer Price Index and we think, okay, this is about normal. And the bond market did the same thing. So interest rates on Monday were 6.54%, a little bit elevated, not too much. But then the retail sales report came out, and holy moly, retail sales, according to the New York Times, retail sales surged in January, a sign of the resiliency of consumers as prices continued rising at a rapid pace. It was also good news for companies, but a potential worry for the Federal Reserve as it tries to slow the economy to rein in inflation. Okay, long story short, people are still spending money like crazy, more than we even had anticipated or expected in January. Well, the bond market freaked out at that news because that tells the Fed that, oh my gosh, maybe what we're doing isn't enough. Maybe we need to raise interest rates even more. So bond markets went a little nuts, and now here we are at that 6.75% interest rate on a 30-year fixed rate mortgage today. That's the average. So both those reports sent the markets, both equities and the stock market and the bond market, into a frenzy, and that's probably still going on today. I haven't actually looked this morning. I just looked at the numbers from yesterday, but that's what the ones that I'm bringing you, the ones from this morning. So when we see those two reports, when we see this frenzy, this is a story we haven't looked at before in terms of what is going to happen in the real estate market. Inventory keeps going down, but interest rates keep stubbornly staying above 6.5%. So it remains to be seen what's going to happen there. It is definitely a more interesting story than it was last week. Last week was I had already said, okay, well, it looks like interest rates are going to start coming back down. We might even see them dip below 6 again. I don't think that's the case now. This retail sales number really blew a lot of expectations out of the water, and the market is really trying to figure out how to triangulate this news and trade it and find, where the market really is. So keep an eye out. Of course, I'll be here next week to talk more about it, and you'll get to see what happens. We'll see if inventory shoots up. We'll see if purchase mortgage applications go down. I will bring it all to you next week. This week, however, we wouldn't be complete without bringing you our Baller House of the Week, and that is what is next. The Baller House of the Week this week. We had 3 houses in the MLS close above 5 million or at 5 million or above. One of them was in Flagstaff, so that kind of doesn't all the way count. Flagstaff, occasionally agents will list something in Flagstaff, something of this caliber, obviously down here on the Phoenix MLS because it's just a bigger market, more eyeballs to market too. At any rate, the winner, though, this week is a stunner. This is a stunner, folks. When you drive up Camelback Road, if you've never had before, and you look to the left between 50th Street and Scottsdale Road, you'll see all these houses dotting the side of that mountain. Well, this is one of them. Your Baller House of the Week at $5.25 million, 5400 East Valle Vista Road, right up on the south slope of Camelback Mountain, overlooking the city with these incredibly stunning views. It's 5 bedrooms, 6.5 bathrooms, 10,000 square foot building. It's on a big lot, except that this lot is a mountain, so you can't do a lot with it. They bulldozed enough room to build this house, but there's not a yard to speak of. There's a courtyard and a really awesome infinity edge pool that looks out over the city. So if you head over to the MLS or Zillow or whatever, you might be able to catch a picture of it. This just closed yesterday, but that is your Baller House of the Week, handled on both sides of the transaction by Retzi. Congratulations to both those agents and, of course, that buyer. This is a stunning, stunning house. And really, the stunning thing about it, obviously they don't build those houses anymore up there. But the views and the location, this is truly the Baller House. Thank you so much for joining me. I'm going to be back with you next week to tell you the story of what happened in the real estate market in the past week. So join me. I can't wait. Thanks so much. And congratulations to us on our 100th episode. We're going to keep going.